Recording. What's going on, Infinite Bankers, family, legacy folks? Glad you guys are joining us again. It is Kyle and I in his studio, my studio. We're coming at you on this video podcast. Jack, just so you guys know, who was with us last week, Jack just had a little boy, right? Am I right, Kyle? Did I get that right?
He did. Yeah. Atticus, born at 10 pounds. He is a
Yeah,
powerhouse baby.
dude, that's you know what? I can't even think about having a 10-pound baby, what my wife would be like. So I'm going to leave it at that right there. But congratulations, Jack, to all of our listeners out there that are, hope you actually, if you're one of Jack's clients, I hope you actually congratulate Jack, because I think it's an awesome thing that Jack has a new baby in his house, and it's been a whopper at that. Okay. So, hey guys, again, so I just want to make sure that we're clear about what we're going to be doing here. So we're all about kind of giving some education. All right. It might be coming at you fast and furious. It might spark some questions. So again, if you've got any questions or anything like that, reach out to Jack, Kyle, or myself. We'll have our calendar links in the description below. More than likely, you can more than happy to get a hold of us. But again, this is all education purposes only. And again, we want to make you aware or make you curious about something. Either way. Does that sound good, Kyle?
Sounds perfect.
So today, Kyle, I didn't show you this at the beginning, but I have right here what I'm holding up is my Nelson Nash Becoming Your Own Banker. All right. And this is kind of like almost the Holy Grail. All right. I won't say Holy Bible, but we'll go Holy Grail. I mean, for people that are doing, family banking, infinite banking, and one of the very first concepts that I learned, or that was kind of a big kind of eye opener to me that I had never thought about before,
Mhm.
and that was that you finance everything. And I actually want to read the actual direct quote, because again, we're dealing with banking. So the shift in our brains as, IBCers or family bankers, or whatever you want to call yourself, you are now doing your own banking system. And that means that you're doing something that is a business, number one. And number two, you have to start thinking like a banker. So I just want to read this first part right here that actually comes out of the book. And it's really about banking. So here goes. This is from Nelson Nash. Banking, the business of a bank originally restricted to money changing, and now devoted to taking money on deposit subject to check or draft, loaning money and credit, and here's the kicker, and any other associated form of general dealing in money or credit. So that is a Webster International Dictionary definition inside the book right here. But the key thing was associated with any form of general dealings in money or credit that he has highlighted. Now, I want to read this definition right here, what this first kind of principle. He says the very first principle that we must understand is that you finance everything you buy. And you either pay interest to someone else, or you give up interest that you could have earned otherwise. Kyle, go.
I, what a setup. I mean, I remember where I was the first time that I heard this concept, that it was presented to me, and I'll never forget it because it 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 immediately checks you and multiple levels on what you already believe about money, um, how money moves, financing, like your ability to do things with your dollar that you may or may not have believed possible. Um, but it does bring to mind, there's an adage, an individual talking about sowing your seed and reaping a
Mm,
harvest, and then eating your bread, and not to try to eat your seed. And I think,
right.
yeah, so often we find ourselves with income or with an influx or surplus or a little bit of capital here or there, and we don't realize what we're holding on to is something that we planted and grown. And that was what was so empowering about this concept when at coming into this idea of being a banker. It's just like, what if we changed the way that you thought about the little that you have left over and how you determined that you were going to use that capital? And so your comment, or the statement that you just read about you're either paying interest to someone else or you're losing the opportunity, missing out on the opportunity to
Hmm.
make interest that you could have earned yourself.
Yeah.
Um, Totally challenged that in me. The belief that I could actually take what I had and then go and sow it and do something with it and expect to see it come back to me. I've heard you say this, so I can let you speak to it. But just having dollars for your jobs, your soldiers, and you're like, you're gonna go out and you don't return without your friends.
Yeah, no, I love that. The analogy that I always like to use is I want my money to be making other baby monies.
There it
Okay.
is.
That's that's what I that's what I want. I mean, we all want that. We all want to have money creating other money while we sleep, while we're enjoying life with our family, while we're reading a book at the beside the pool, or even while we're even working. We want money to constantly be growing passively for us. That's what everybody wants to do. But so few people, and I was one of those until I got introduced to this,
Yeah.
actually said, "Holy cow!" You know that mortgage that I had many years ago. That bank was making way more interest on me, even though I had a low payment. It was still financed for 30 years, and I they were making money on top of the money, and I was just paying off all that, and they were making that interest on me. And it never dawned on me that I could actually make interest on myself and even loan out money myself to another individual, and actually have it repaid to me. I mean, that kind of concept really was foreign to me until I was introduced to this.
One of the things that I also find a lot of value in, especially in these conversations with you, Tyler, is going beyond the podcast level surface like concept and into something a little bit more tangible. So, what did this look like for you in a tangible format with infinite banking when you started to get into the concept?
So, well, so one of the things that I saw was I, I almost going to call it I'm stealing this from another guy, but it makes sense. A, a double dollar strategy, okay, where that I could have my money making more baby money and growing, okay, and then I can borrow against that money that is continue growing and go out and finance, or either, like, for example, I just was approached by a gentleman, um, who is a who wants to build a home, custom home. He and his partner wants to build a custom home, and they needed a certain amount of a loan that they wanted to loan from me. I was going to be in the first position, and I was going to make probably about 12% on that amount of money. Okay, that I was going to loan out to them. We haven't finalized that deal yet, but it is that opportunity where that I'm going to be able to generate, while my other money is off to the side, still creating more baby money. I'm now going over here and creating other baby money. All right. With this whole concept. And then now I'm able to take that money that I've had those new babies and put back into this whole banking system that I have. That right there, now that these things are starting to pop up for me, is expanding my brain to all these possibilities that of what I might be able to do with, say, you know, the stock market or whatever that I might want to be able to utilize. So it's those types of things that I'm seeing right now, Kyle, to be able to do that with.
Yeah. And you're touching on some concepts, if I may. The one that I really love that you're hitting on is good debt versus bad debt. And
Mm,
this concept really forces you to address that and come up with a solution for it. Because if you put money over here and it's earning at 5%, and then you take a loan against it at 5%, then you're effectively kind of, I mean, this compounding is going to continue to grow. So it's getting you a better return than it's going to cost you. But if you do that, you're immediately wanting to take that loan at 5% cost and find something to put it into that's going to get you a return greater than the cost of that loan. Or at least that would be the concept of good debt versus bad debt. So if you take that $10,000 loan at 5%, you go buy a vehicle that isn't making any money for you, and you're just paying off that interest in that loan. You're operating under a bad debt principle. Um, Whereas like Ethan Nelson Nash, I love how he gets real close and nitty gritty with it. So I'll get to his in a sec. But if you were to take that car and you were to Turo it out or put it on a site that was able to be rented, and then you started to make money on that car at a greater rate of return than it's costing you to use it, then you just shifted your 10,000 from bad to good debt. But the other concept that Nelson Nash introduced that blew my mind was the idea of what if you paid yourself back at a greater rate of return than the cost?
mm,
So what
yes.
if instead of we pay back the $10,000 loan on our car at 5%, we pay our $10,000 loan back on our car at 12%.
Mm,
Um, and it's just this like cyclical principle. It took me forever to like really digest that and understand it. Uh, but now, as a father with a son, and I know that you are as well, I get really excited about the idea of teaching him how money works by getting to utilize loans like this for him, and giving him, sums of money and challenging him to turn it from bad to good debt.
yeah. And you go into the legacy side of things now, Kyle. I mean, that's this the rabbit hole doesn't just continues to grow, even more because, you know, I mean, I I was listening to a podcast the other day about how this one young lady, her father set her up actually with a kind of the infinite banking. He took a loan out, not a loan out, but excuse me, a policy out on her when she was young and started just putting money into that policy, putting the money in the policy to where that whenever she was 20, I think she might have been 18 or 19 years old. What she did was, and she's got actually three siblings. Now, I'm going to use this as an example. She's got three siblings. Her and her brother now have opened up other businesses for themselves, okay, because they borrowed against the policies they had and have gone and opened up those businesses. And their dad actually controls all that, okay? He basically loans out the money for them. Okay, she's the insurer, or yeah, I think I'm saying that right. She's the
Insured.
insured.
Yep.
Okay, but he's actually the one that owns the policy and basically is funded the policy. Okay, well, at the end of the day, all the interest that she's been paying back into the dad is actually notating all this, and whenever the death benefit, whenever because I think it's actually maybe on him, actually the dad when it actually, yeah, actually the policy is on him. So when the dad actually graduates, all right, she will get a bigger size death benefit because of the her pouring back into it. If I'm making sense with this, Kyle,
Yep.
the other brother's doing the same thing. The third brother doesn't even want to do anything about it. So he's still going to get a death benefit, but it'll be much lower, all right, than what the other two are going to receive. I When he was talking through that, I was like, "What?" I mean, that's genius right there. It's teaching your kids how to be opportunistic, entrepreneurial,
Mhm. Yep.
right? But it's also rewarding them down the road to want to utilize dad as the bank instead of going back. And granted, when she was talking, the actual loan amount, the interest rate that the dad was charging was like I think right around 13 to 14%. It's like, well, I could go to a traditional bank, but here's the thing, you don't get that money back. If you could go to a traditional bank and you pay, say 10% for a business loan, well, that's just going back into that, you know, ABC bank that doesn't care anything about you. But guess what? Dad does. And you get that money back when dad graduates. it was that kind of thing. Thinking from a legacy standpoint, I'm like, God, that I've got to start to teach my own kids how this works and how they can benefit from this by us keeping it all in the family. So there you go.
100%. Yeah, you got my wheels turning on so many levels just now because and this is really what birthed like these discussions is what brought the passion in me to want to get into this and start educating other people. Because I realized that what's coming as a fruit of this conversation is that I'm now being equipped with new ideas and strategies that I can go implement into my own family, into my own life, that are going to have exponential returns for generations to come. And
100%.
and it's just because of some added knowledge, because you threw out a concept that just challenged me to think differently about even the relationship I have with my own father. Is actually where I
Mm,
went with it, because I was thinking about, oh, I could do that for my son. I do want to empower him to learn how to borrow against his own capital, but then just realizing, like, wow, I mean, there's been opportunities in my own life where I've looked for the cheapest funding possible or the easiest way to gain, access to money to be able to do something entrepreneurial because I'm a serial entrepreneur myself. Um, but then just thinking through the lens of like, what if I took a higher stake loan from my father, someone who I would be more than excited to be generous with and to pour back into. Um, I just love that idea. You got my wheels turning. So
well, I mean, again, it goes back to the whole entire principle. I know we kind of got to land this, Kyle, because I know you got to bounce here, but it goes back to the principle.
unfortunately,
Yeah, we can keep talking, man. But you know, it goes back to the principle that I want our listeners, and viewers or listeners, viewers, whatever it is, to understand that look, you're going to finance everything you buy. Okay, money, money is something that is always moving. It should always be moving, and whether or not you're going to be on the side of where you're giving the interest to somebody else, okay, or you're actually having the interest on the other side for yourself. It's your choice. And that's what I love about this concept that Nelson Nash just kind of very first principle he says that you have to understand as a banker, that you're actually financing everything you do, no matter what. And so I love that right there. Any closing thoughts from you, Kyle, real quick?
don't have anything closing, um, but it just makes me think that if any of this felt like it was over your head, if you're listening to this, first and foremost, just play it back, start it over again. But if there was something that you couldn't connect the dots on, please reach out to either one of us or to Jack if you're one of the individuals that he's worked with. Just because I think that I can speak for us and for Jack for sure, just that there's a passion behind the educational process. And this is, I mean, it's not a pitch at all. And I hope that this video goes to friends of mine that I'm already doing business with, and it still turns into a conversation to get their wheels turning about generational legacy wealth for their kids and from their parents. And that's what this is about. That's why we're doing this, creating time on an afternoon to sit down and hit record when we could be doing other things. It's just because we do genuinely care about getting these concepts into a tangible format so that you can apply it to your own life.
Amen. Amen. I love it. Thank you so much, Kyle. Guys, again, if you got any more questions like this, Kyle, as you just said, reach out to us. But we'll call that a wrap. Thank you all so much and have a great day.
I think you have to hit stop on the recording. It's saying request host to record